Guys, good morning, guys. Good afternoon, good evening, guys. This is your boy, Network. So, in this video, I'll be showing you the correct way to trade boom and crash indices. A lot of people have lost a lot of account on trading boom and crash because we trade it wrong. We trade it on the 1 minute time frame, which is very, very wrong. Use your moving average. A lot of mentor will tell you when it crossover, take a sell. When it crossover, take a buy. And most people psychologically can't trade the spike. This red long candle, they are called spikes, while these small candles are called tick. So now, if you want to trade boom and crash successfully, especially boom 1000, I stand to be corrected. The best to trade is for you to buy, which is trading the spike, not the tick, because you see this red candle, this red gigantic candle don't respect stop loss, but this tick respects stop loss. So even if you take a sell right here and you put your stop loss just above here, let me use my arrow. I'm on a trade currently on this. If you place an entry here and your stop loss is above here, this spike that took this eye out, this spike is going. If you put your stop loss here, it's going to just shift your stop loss to the point the spike stop. And that would be a big loss. If you're even anticipating to lose your $2 or $5 or $10, you can end up losing more because the spike can take a whole lot of cash from you. So I'll be teaching in this video the right way to trade boom and crash with my back test. So what you just need to do is don't trade on the lower time frame, go to your higher time frame. Now I'm on a trade on boom and crash, though I entered late. I'm on this sell trade. I'm trading the tick. Though the best is to trade the spike, but I just wanted to take this small tick. Is about to take profit now, guys. Let me show you. I entered late, so I used a small lot size. Here is it, almost $6 here. So I entered with a very small lot size because I should have entered the trade around here, but I saw the entry very late. I put my stop loss. The only broker you can get this boom and crashing is only Kwaku and Deriv. If you want to open a Deriv account, I'm going to be dropping a link down in the description below for you to just sign up with Deriv. So I don't know why it's not allowing me to shift my stop loss to break even. But guys, this is the right way to trade boom and crash. I am an SMC trader. I trade basically supply and demand. I trade supply and demand, and in this market, you can easily use supply and demand to take your trade. Doesn't mean it is 100% accurate because there's no strategy that is 100% accurate. But with the right risk management, you can make a lot of money trading this pair, and you can lose a lot of money trading this pair at the same time. Let's see our profit right now, guys. You can see, I think the network definitely it is not even moving. So let's just wait for it to load back, guys. Let me wait for it to load back, sir. So while it's trying to load, so now trading this pair is you can see a spike just happened here, and I was anticipating it. I was anticipating this spike. Let me shift my stop loss to break even. I was anticipating this spike already, and it happened. Yeah, it is easy. Trading is not too complicated like we thought. This spike happened because there is a supply, there is a demand zone right here. The market is still going to probably push down to this zone because there's liquidity. That's why I'm not taking the trade yet in this zone, because there's this swing low liquidity below this zone and it might not hold. So now this demand zone, I can just easily draw it from this red candle, this red candle, for you to see that the market has already tapped into our demand zone. And when the market tap into your demand zone, what are you expecting? What should you be expecting? You should be expecting the market to buy up. You should be expecting the market to buy up. And if the tap into your zone, be expecting the market to sell down. So now the market already tapped into our demand zone. The market is going to start tapping up and buying up. That's why I set my quick profit just below. I was using this candle initially. Let me zoom in. I was using this last bearish candle initially. This last bearish candle. But the market came and tapped into this last bullish candle and spiked up. If I go on my lower time frame like 1 minute, you will see the level of the spike. You can see this is the spike that just happened here. This big candle. This big candle is just what happened here. This big candle, showing us that we are now losing momentum. That's why it's better to trade this spike. You can see then we are already on about $5.99. Now let me show you now. You can see just one spike. You can see how much we are losing now. We are down. We are about going to about $4 right now. So you can see how much this spike takes. So now, you trade it on your 1 hour time frame. That is from my home back test straight on your 1 hour time frame. So I'll still be waiting for the market to hit take profit, and I'll be waiting because I will be trading basically spike. I'll be trading basically spike. So I'll just be waiting for, if I will set my buy limit, it might not get triggered, but for a good risk management, the way I've traded this and it has worked for me is to set my buy. You know, I told you that this is a low probability buy because there's a liquidity below and there's another zone just below it. So I'm going to be setting my buy at the 50%. That's a consequent encroachment of this demand zone. So I'll be setting my stop loss just few pips below the zone in case the candle want to sell, because those little ticks will be moving small. So let's just say we are risking $5 on this trade. My take profit will be around $15. So it means I'm going for a 1 to 3 risks to reward. So I'm just going to be setting my limit here, closing my limit here, and I'll be waiting for what the market is going. Either it hit my stop loss of $5 or it might take profit at $15. So this is this trade I'm going to be taking. I'm going to be showing you update on this trade 1000. Trading on the higher time frame. Don't ever trade on lower time frame, except if you are skilled enough to trade on lower time frame. Don't trade on lower time frame. And now you see the market tap into this zone, and after the market tap into this zone, we start seeing series of spikes happening. Let me show you on my 1 hour time frame now. Let me show you on my 1 hour time frame. On my lower time frame, on my 1 minute time frame. You can see what is going on right now. So we are still waiting for the market to come down to our take profit. Our take profit is just here, this green dotted line. So that's what we are waiting for. And we already set our stop loss to break even. Let's see what the market is going to do. Now we already set another entry for a buy. Set another entry for a buy at this 50% of this demand zone. And if we check overall trend, the market is bullish. The market is still bullish. It has not broken it has not changed character. I will just be waiting for it to change this. I will be waiting for it to break past this level for me to now say, okay, this market has broken, has changed character. If it breaks past this level, then I will know this market has changed character. But so far, all these movements below are just minor structures. So guys, I'll be updating you on this. I'll be updating you on this trade. So let's just see what this market is going to give to us right here. So I'll update you on this trade, guys.
1 hour later.
So guys, like I said, look at what the market did. The market tapped into this our demand zone and started spiking, and the spike took our break even out. And what did I tell you about break even? I said anywhere the spike started from. That's the let me just show you on the lower time frame. Look at this last spike that happened. Look at it. So the spike happened here after tapping into our zone, and it shifted my stop loss that was somewhere around here, shifted it and still make me take a loss. It shifted our stop loss that was around somewhere here. It shifted it, and I still took a loss on this trade. Let me show you. Look at this. Look at this loss. I lost about 0.11 cents on this trade. And normally, if this spike was where our stop loss, it should have just taken me out around there. But the way boom and crash has been calibrated, it will shift your stop loss to the end of the spike. That is why it is better to trade spike. Tick will respect your stop loss when the tick tap your stop loss to close, but spike will never respect your stop loss. You can see why I made loss on this trade. I know once it tap into this zone, it's going to start spiking up. And the funniest thing is it can now sell down to tap into this my zone and now start pushing up. Or it can keep pushing up from here. So this is how to trade boom and crash. So guys, the market tapped into my after this small rejection. The market later tapped into my zone and it did take profit of this sale. And you see how that spike works. And now it tapped into my zone and started spiking up. You see, it didn't even touch my stop loss. This is the first spike we got, and we are up in profit, guys. We are up in profit. Let me go on my lower time frame to show you. Let me go on my 5 minute time frame. This is where we made our entry and market spike up. We're expecting more spike to the upside. So our stop loss is just here and our take profit is right here. So this spike is very, very fast. Spike is always very, very fast. Let me show you my small profit, guys. My small profit $2.6. So let's just see how this market plays out, guys. Okay, guys, so we are up and running. We are up and running, guys. We are up and running. So the market already tapped into our zone now. We are seeing series of spikes. It tapped us in here, and we are starting to see spikes. Let me go on my 5 minute time frame to show you guys. You can see we entered the trade here and started seeing some spike here, and we are going to ride the spike up to this point. Profit, guys. So profit, guys. Let me show you. Yes, you are profit. The minimum lot size. So guys, you see, after it break even here, so I entered here expecting the market to push up. So the market push up a bit, then it's me, take me out here. So the market took me out here. And I said it initially, this list might be an inducement and there's liquidity below this demand zone. So market could just take this as inducement and come to this extreme demand zone. And immediately market came to this demand zone. I wasn't online, I wasn't on the chart. So the market, I could have just entered at the middle of this zone. So and that's the way I do it. I'll enter at the middle of this zone. Let me just mark it out here. I'll enter at the middle of this zone. That's the midpoint of this zone. And immediately my stop loss will be reduced by immediately besides seeing some spikes here. Now let me show you on the 15 minute time frame. You can see if I've made my entry around here. You can see these massive spikes that started happening. So if you go, let me show you my profit, guys. Let me show you my profit for you to see that this strategy works. You can see this is my profit. I use the minimum lot size. This is the minimum lot size, guys. Minimum lot size. That's $9.71 already with minimum lot size, guys. Minimum lot size. So still expecting the market to push. Though I made a late entry here. Now imagine with this little push, with the minimum lot size, I'm making $9 plus. Now imagine I made my entry from here and I caught all this. This could have just been double of that $9.7. This would have just been more than double because this and this is just more than double. So the attacks will have been around $20 plus with the minimum lot size. So for you to go see, guys, that it is working. So I'm expecting my take profit should be around here. So that is just it about this trade. So there's liquidity below this our zone, and the market took out this liquidity, came to our zone, tap us in, and started spiking. You just have to be patient, guys. You have to be patient. It's really painful. I missed this entry here. I missed it. It's really, really painful, but it is what it is, guys. I see that enter here and I made some profit already, guys. I'll update you guys on this very trade. So guys, the market is about to hit my TP. So you can see as soon as I took this spike from here, it started spiking up and it's almost at my take profit, guys. I can close my trade right here, guys. This is massive. I should have taken my entry from this green line, which is the 50% of this demand zone, which is the consequence encroachment. I should have taken but I wasn't on the chart, so the market started spiking up and almost at my TP. Let me show you my current balance, guys. Look at it here, guys. Look at it here, guys. I'm going to just close the trade right now, guys. Alright. Now imagine I started taking the buys from here. You can see how much I would have made with the minimum lot size, guys. With the minimum lot size. So guys, the market finally hit TP after we should have entered at the consequent encroachment, the 50% of this demand zone, but we saw the entry rate around there, but it took the spike. And let me just show you on the 1 minute time frame, on the 5 minute time frame rather. You can see we took it from here and hit our TP here and started spiking up. Assuming we have entered at the 50% and our stop loss will be below, to start spiking up from here. And guys, it was quite a profitable trade. So I will be waiting for it to sell down, for it to come down to this another demand zone I marked out here, and I'll be entering at my 50% level. My stop loss will be far below here, so I'll be expecting spike. I'm not trading tick, I'm trading spike. So let me just show you my profit on this trade. Let me show you my profit on this trade. So it's really a textbook trade. I said this was going to happen and it's happened. It's either a win or a loss, guys. Let me show you my profit on this trade. Here's my profit on this trade. TP $22. Now imagine we entered over here and took all this spike. From here it gave us about $22, and if we have entered around here, they have given us like double of what we got. But this is what it is, guys. This is what it is. So this is the end of this video, guys.
So guys, thanks for watching. So if you are new to the channel, kindly click the subscribe button and press the push notification bell so that you get notified whenever I drop new content like this. And this will be the part 1 of how to trade boom and crash. I'll be releasing the part 2 and I'll be showing you some trades I took in the part 2. So thanks for watching, guys. Stay tuned and